specialize in is home loans, property investment. We also specialize in financial advice. We specialize in helping you register your trusts, your wills, and overall estate. We also help with ITC service and credit bureau services. Perhaps you would like to rehabilitate your credit record. You're more than welcome to reach out to us, and we will help you walk the journey until you're ready to invest again. I would just like everyone to mute their mics. That's just one of the rules that we have, because if you don't mute your mic, then we won't hear the speaker properly. So we're just requesting everyone please mute your mic. There will be time in between presentations. The CEO of YD2 Group is Mr. Abela Tlali, and he's the one who has been doing these seminars for the past 6 weeks with us. And it's been such a pleasure to bring you information in property investment. We've had so many different kind of interesting questions, and we love engaging with you. Please just be on the lookout on the comment section. There'll be questions and answers going through. You are more than welcome at any stage that you want to write your question in there. And I'll also be communicating where you can get hold of us. We are available on most social platforms, if not all, and I'll be shared hold of us and so forth. So now I'm just going to give over to Mr. Abela Tlali as we start with our presentation today. Thank you.
Thank you, Madam Tiamo. I would like to greet everybody this afternoon. I hope everybody's doing well. The economy is opening up on Monday. Many people are going to be able to get back to work and be able to do, or rather to generate some income yet again for those who are not able to do so. Thank you for taking your time out to join us. We don't take it for granted. We will be finished by 1:30, as it was already said, except if there are then extra questions from people and would like to stay longer with us. Without wasting any of your time, let's get right straight to it. Every week, for those who've been with us, every week you would know and understand that we do a different topic every week that we address. It's not the same topic every week. We attack different topics that are building up towards the property investment now and beyond the lockdown. It is something that I have never done before. For those who know me, I hardly ever do this, but I decided this time around to do it, to empower our people and even to do it for free, just to make sure that many people get to partake and benefit from the things we always share. Please do feel free to contact us and talk to us during the duration, and then afterwards as well. We are here to assist. All right, as you can see on your screen, the first, or rather today's topic, is basically how do you use the current low rates to your advantage? Because the rates are currently extremely low, and the question then becomes, how then do we use it to our advantage as it stands now? Because the rates are very low. Many people have got questions about it to say now what happens next with the rates. Now I'm going to touch, for those who missed last week's webinar, I'm just going to touch only one slide screen on it, on last week's webinar. And the video from last week is also going to be uploaded with this one in the coming week on our YouTube channel, YDT Group. Please go and subscribe now so that we get to see everything we load up all the time when we load it up. There are 4 factors that are currently influencing the market. When we're talking the market, remember this is a property investment webinar. So we mainly are focusing on the property market as it stands now. And those 4 factors is economy, the economy around us in general. It is the interest rate. It is the lockdown, or should I say also the trade. The trade is affected because people are not free to trade as it stands now. And then it is also the estate agents. I highlighted last time that this is not against estate agents. This is not now, if you're an estate agent, be thinking, is it now against us? Definitely not. We recommend people to use professionals We are just saying that in a general market, estate agents are standing between the seller and the buyer to advise you as the purchaser or as the seller. And now they are unable to move. As a result, they are now also affecting the market because now they cannot be able to trade. Now, we're only going to look at two of those four factors today. And we'll be focusing on the economy and the interest rate, because today is about how do you then take advantage of that? How do you make it work to your advantage so that you continue to make more money? All right, during this time. Okay, now let's have a closer look at the economy. The overall economy is projected to contract with 7%, not grow, not anything, but to contract. And it is a very unprecedented thing that the economy is even projected to contract and at 7%. That is, it normally grows. Sometimes we are sometimes projected to grow at 6%. That's the growth that we want. And then in the recent years, it has only been growing at 2%, 1%. So it's not been doing well in general. However, now it's also expected to contract with the whole 7% altogether. Now, how then we will look into it today. What does it mean for you as a property investor or as a potential property investor? The second thing I want us to look at in terms of looking at the economy is that the interest rate is now currently at 7.25%. And in January, it was 9.75%. So that means then because it dropped, the last rate dropped now in last week and on Thursday. So meaning in about 4 months, the interest rate dropped by 2.5%. The economists will call big numbers. They will tell you 250 base points and all the great things. Now, the interest rate is what the bank charge us, you and me. It is what the bank bases their should I say their basis so that they can charge you an interest. Now we look at the repo rate. Their interest rate is should I say informed by the repo rate. The repo rate is the rate at which the Reserve Bank is charging the banks, or should I say all the lenders. Now the repo rate is at 3.75. Beginning of the year, it was 6.5. Both of these are spoken and estimated to be at a close to 5-decade low. Now, in that 5 decades, we have had different types of market turns. We have had a 2008-2009 recession. We have had another slow downturn around 2015 and shortly thereafter. We have had, of course, 100 years ago, the 1918 depression. So we've had a different trends during this time. For those that were not here just for their benefit, the difference, what makes this time different, is that all these other previous market downturns, the interest rate will be picked up to be able to absorb the pressure of the downturn. But this time around, the opposite has been done. The Reserve Bank, and in turn the banks, have also dropped the rate. And we're going to look into that today and how and what it means and how you can make it work for you and in your favor. Then why would the Reserve Bank drop rates? I mean, it doesn't make sense. Like I just said previously, every time the rate would be picked up when the economy falls, the interest rate would be higher. I mean, in 2008, 2009, which is the time I just started investing in property, the interest rate at some point, I think, was 13.5%, if I'm not mistaken. I stand to be corrected. But all I do know is that at that time, we picked up a lot of properties because now the owners could not keep up with the bond. Mostly the multiple property owners, because the interest rate went so high. So why would the Reserve Bank do this? Okay, in the midst of it all, and it is unprecedented. The answer is just to open up spending. It is to open up spending during a crisis. Should they open up spending during a crisis? Is it good? Is it not good? Why would they do that? Why would they drop it during a crisis? Is it a threat? These are some of the questions that have popped up. I've seen people discuss and debate them on Twitter, Facebook, everywhere. I have had people talk to me directly as well, telling me, hey, listen, this is a trap, and this is what everybody is saying, and this is this. And so today we will be answering all those things so that you understand what this means and how you can use it to your great advantage. And for how long is this going to be? Meaning that how long are they going to drop the interest rates, or how long are they going to keep them low? Now, the next question is, what if it goes up again? Here you are, they keep it low, you buy, and then it goes up again, boom, in your face. Now you are in the same position as the guys that were there in 2009. It went over up until beginning 2010, just before the World Cup. So does it now mean I will also be in the same position if it goes up again? Am I now going to be trapped with these many properties that I would have bought, that YDT has been saying, buy, invest, this is the best time? Before we go any further, I want to take the first round of questions so that we can just make sure we're on the same page, because we all have to understand this, where we are, before we go into the next level of our webinar. Over to you, Tiamo.
Awesome. Okay, welcome everyone. Thank you so much for joining us. I see people are still joining in. You're more than welcome. You are welcome even at this point to just raise your hand or to drop a comment or a question in the comment section, and I will read it out to Mr. Ebela. Or you're more than welcome to unmute your mic right now, and you have the platform to ask your question. Thank you. Okay, we have a question from Lubabalo Pakate. Lubabalo is asking, how can one pay less taxes? Or how can one pay less in taxes? Yes. Did you get that, Mr. Dlali?
All right, I got that. I'm not sure if I understand it, or if perhaps it is because we have not addressed taxes yet, so I just need to understand the question further. Or if maybe Lubabalo can then hold it up a little bit up until a later stage, if possible, because I'm not.
Lubabalo, you are welcome to unmute your mic and speak. Or you can just indicate that whether you would like to ask the question later, rather. Lubabalo says he or she will ask the question later. And that's the only question on my side. I think we can continue.
All right, thank you. All right, now let's get this horse going. Now let's have a quick analysis. Let's have a quick analysis of the questions that we've just asked now. Let's just understand everything and do a reality check. We'll say take off the baby ugly glasses. Yes, it is a trap. It's a trap, but it's a trap for consumers. It's a trap for consumers. Consumers are the people that if they get a call to be told you qualify for a 10,000 credit card, they take it, they go spend and buy furniture, and then now they must be left to paying off the debt. It's a trap for people that are not investors, that are consumers. All right. Now, yes, of course, it's going to increase the shopping appetite. That's definitely for sure. And that is what is intended by the government or by the Reserve Bank, to increase the shopping appetite, which of course will definitely increase spending. Remember, when the market is down, what is needed is market activity. It is market activity in a form of trade, buying things, being able to create income, and all those activities. So dropping the interest rate was mainly to open up the market, and it's going to create a spending. And of course, the ugliest hoho that most people has been confronting most South Africans, there will be more debt because the interest rate is low. Like I said, people have a higher appetite. It's going to increase spending, and that means people are going to get into more debt. However, which is the biggest point, and that is the point that we will be working on mostly today, it is a time of opportunity for investors. It is the best time if you are an investor because the interest rate is low, and mostly when in your investment, if you use other people's monies to make your investment, because then what it means now is that it's going to cost you less to make money. It is the best time ever. All right, now, how then do you take advantage of this time? The first thing that I'm going to say, of course, the property webinar, but there are other avenues. But the best one right now is to invest in property. Is to invest in property and immediately thereafter, not necessarily immediately you can check. I did share my personal view and my opinion last week as well. And I said, my risk appetite is extremely high. I would personally, after purchasing, wait before fixing the interest rate because it might still go down. Because remember, what the Reserve Bank is doing, their intention, like I said, is to open up the market, increase spending, increase the debt book and economical activity. And if they see that their objective is not being able to be achieved immediately, they might still continue to drop the interest rate. We do not know yet. But in the meantime, I would personally wait because when they increase it, they are not just going to shoot it from 7.25 to 13%. They are going to do it in stages. So if then you wait, by the time they do it in stages, you are ready to go back to the bank and say, wait, now let's fix it. All right, the third point is to maximize the property income. You maximize the income because remember, the banks, when they fix interest rate, most banks don't fix it forever. They fix it for a number of months, whether 60 months, 120 months, depending on your profile, depending on the bank, their appetite in terms of fixing the rate, how long can they fix it? So maximize income. Remember now, I'm going to put this in an example. If you have bought a 1 million rand property 13 months ago, you would be paying between 10, depending on your credit record, but you'll be paying between 10 and 12,000 rand a month. Today, if you buy a 1 million rand property, you would be paying between 6,500 and 8,000, again, depending on your credit record. So now what then happens is you are paying less for the same property. However, the rentals have not decreased. The income of the property does not decrease or has not decreased. So therefore, if then you use this time while you are paying less to increase your income in your property, by the time you get to fix, by the time your fixing period expires, by the time everything changes, if you already have learned how to maximize your income now, you would already be in the best foot going forward at that time when that time comes. Okay? And then the other thing you can do, you can help yourself by settling your bond faster. You can take advantage of this by settling your bond faster. Not cancel the bond, settling it faster. We will discuss that. I'm going to give for the first time a hint. Next week, we're talking about how do you pay off your bond faster and how do you create reserves in your bond. So we'll discuss it next week in detail. What are ways as well that you can use, that you can implement to use your bond of your existing property to acquire even much more property and to even build greater wealth for generations to come. All right. Now we move on. Who should buy at this point in time? You will notice the presentation is not going to be too long today because I understand there will be many questions. So we will open up the time, the rest of it for the time. So don't mind me going through it. Please note your questions on the comment section or write them down so that you can raise your hand when the time comes. Who should buy now? Now, this part becomes very important. It becomes very important simply because, remember I said earlier on, the market being open, the interest rate being dropped is a trap. So you might fall into the trap if you do not know what you are doing. So I appeal to you to use professional services, because if you don't do your things right during this time, your victory might not be lived for long. So please listen on this slide very carefully. It is the people that are market ready that should buy now. When I say market ready, I mean you have been intending to buy. You have been planning to buy. Your credit record is good. You have already been considering this whole process. It is just an opportunity meeting preparation. You have been prepared, now an opportunity comes. That's the person who must buy. The second person is the person who's an investor in property, the person who's building a portfolio, because this person has already made a decision and is implementing this decision as they are going on in life. That's the time, because they already know what they're doing. They've already looked at everything, and therefore it is now implementation time for them. Anytime is implementation time for them. And then thirdly, it is the people that flip property. Others would call them the speculators. These are the people that buy property to sell it later. This would be, even for them, even more of a better time, because they would be paying much less now for the upkeep of the property before they sell it. That is if they're putting up a bond. Okay? And then for a tenant, not just every tenant, for the tenant who has been thinking and considering, has been thinking, how much would I pay if I were to buy a property? In between, I'll put in some testimonials of the people that we've assisted recently. We handed over one key this week. We're handing over another key this week of properties that people were awake, took advantage of right during the lockdown. So this particular client bought a property. She was paying rentals for 5,300 rand for a two-bedroom flat here in Bloemfontein, and which was in the CBD basically. And the person was in communication with us. We've been assisting this person. We are starting to build a portfolio. But then they said, listen, I just tired of the rent as well, so I need to get a place. We got a very great deal for her. I'll give a bit of details. The property she bought is in a complex in the north side of Bloemfontein. For those who do not know Bloemfontein, the north side of Bloemfontein is the mostly desired area to live in. For most people, it's currently the most expensive part of town. So we got an apartment, or rather a property in a secured complex. She got a place for 670,000 rand, rather 650,000 rand. Now I'll tell you a bit of history so that you understand how the market looks like now. The property was bought by the seller, who just sold it to her now, for 670,000 rand 7 years ago. So she bought the property less than the previous owner 7 years later. And she's going to pay on that property below than what she is currently paying on her rent. That's what I mean by the tenant. Most tenants at this point in time, because of the interest rate and the current market, will buy almost anywhere, will be able to pay less for the same and possibly better, like this lady has definitely much better, in a better location with better features, better security, better everything. And she's going to pay much less than she was paying when she was paying rent. And those are the tenants I'm talking about. I'm not talking about any and every tenant. I'm talking about the tenant that can be able to pay less, and that tenant is ready for the market as referred to on the first point. All right. Now, these are the practical tips that will prepare you for this time to be able to purchase. Number one, you need to up your credit score. Now, we did a credit record management and the credit score management webinar. Please go to our YouTube channel and go watch it. It will definitely revolutionize your life and your outlook in terms of your credit score. Up your credit score. Remember, we've already seen the first wave of the effects of COVID-19 and the lockdown. There are people who have already lost their jobs. There are people already who have less income. If nothing has changed in your income stream during this time, since the lockdown, you are one of the fortunate people. Now, what then the banks have looked at, they said, we know, because they've got economists that can project certain things. They know that this was just a first wave. This was just a taste of what will still happen. Remember, I'm a very optimistic person. I'm just giving the reality picture. I'm not a prophet of doom. I am a very positive person when you get to know me. Now, they know the next waves that are going to come. They know the people that are still going to lose jobs. So what then they do? They then look at the people with a very high credit score, because those people have been deliberate and intentional. You don't get a high credit score that is above 620 score points just by the way. So they look at it 620 as the minimum, 640 as the ideal score that they are giving these deals for. And for those people, they are making it easier for them. They are opening the market for those people. They are giving 100% bond for those people. Some banks are even going towards, through our in-house bond origination, They're even going at 104% of the purchase price as it speaks during the lockdown. But some people that are below that are not being approved, who would normally be approved. Okay. Second point of a tip: you have to change your mindset. You have to adopt a new mindset. Like many people would say, I'm sure you've heard it in many things. You've heard it at your church. You've heard it in motivational speaking, in the books you've read. You cannot do something new with the old mindset. You cannot continue to achieve new things, keeping the old mindset or doing things the same way you used to do them previously. You have to think differently at this point in time. You cannot be, I'll make an example. You cannot be the person that thinks how much it's going to cost me. That's not an investor mindset. An investor mindset is how much is it going to make me? Regardless of what I'm going to spend, how much is it going to make me in return when I spend this amount? And you need to adopt an investor mindset. An investor mindset is a mindset, like I said, who's thinking how much is it going to make me, and who thinks long term, who's able to project, look into the future and say, in the future, in the long run, what will this do and how will it work for me? And then you have to plan very well. You have to plan your things out properly and well. And for that to be done, you must also consult professionals around you. Your financial advisor, financial planner. You must consult, of course, a property specialist. You must consult, you must have mentors. This is the best time to have mentors in property, people that have done it, people that have seen at least one wave before and have survived it, people that have been doing this for longer. Consult those people. Plan well. Put everything in place and in perspective. Then you must be patient. Now, where does this patience fit in? Patience fit in as a general rule for investors in property. If you are always in a hurry, you will not be able to get the most in the deals in property. In the property market, you must be patient. Be able to wait and see. Sometimes, I'm speaking now also as a seller in some instances, or in many instances. Sometimes my reasons motivating me to sell today are not that great. So when you come to me and you talk to me to negotiate today, I'm not motivated to sell. But it can change by a matter of a phone call. Somebody might call me with a better opportunity tonight. And tomorrow, I might speak a different language. I might be motivated to sell because I need to liquidate here so that I can invest in something else better. So do not be in a hurry. Yes, I know this mostly applies for people who then has a quick turnaround decision making. They want to make decisions now. Be patient. Then be willing to negotiate even further. Don't just take it as it is. Negotiate further. Yes, the objective of all negotiations for you to win, I can refer books, I can do webinars upon webinars just on negotiation alone. Of course, but the statement that has been going around is correct. The best negotiation is a win-win negotiation. But still negotiate further. Still with that in mind. All right? Now, the next one is to look for a day one asset. For the people who have missed our webinars, again, I'm going to reiterate, please go back to our YouTube channel. You will see there's, I think it's one with the first one or the second one, we defined a day one asset into detail. A day one asset is a property that is making money for you, and it is also profitable from day one. It is giving you income, and it is profitable from day one. In other words, all your expenses that you pay towards that property are covered by the income that it makes, and you have change left on that property. So look for those deals now. Also, what we highlighted during that time to also understand why should you look for a day one asset is that in business, the best business coaches would tell you that before you get into a business, you must already have your exit strategy. Before you get in, have your exit strategy. Now, it is the same with investing in property. Have your exit strategy ready. When can I sell? How would I sell? What is the maximum would I have to accept if I were to sell? So when you have a day one asset deal, then you already are including that as well in your thinking and your planning, your exit strategy. So that then should the market get worse and there are much lesser buyers and you end up being in a seat of a seller that is sitting in today and you are sitting in that seat 5-10 years later, you are then not in a bad position. You can still be able to get rid of the property, sell, not make a loss, and be able to continue with your head up high. And while at that, in your mindset and in your tips, don't ever form any attachments with any of your assets. You never ever form an attachment with an asset. I'll get all biblical and scriptural with you. These things of this world must never own you. You must own them. Meaning at any given moment, you must be able and willing to let it go. Sometimes you might lose it. If you don't have attachments, you will not be depressed. You will not have all those things. You'll be able to let go and know it was a business. It was just business as usual. Okay. Of course, when you consult, we plan, we assist you at YDC Group against all those things, because some of these things we've seen them firsthand and with our clients as well. Now, you then buy below market. That's another tip. Buy below market value. In our previous webinars, we've advised our people that you must buy at least 10% below market value. And the reason for 10% below market value is that 10% is most probably the cost that you will have to incur for you to purchase a property. Almost 10% of the value of the property. These are the transfer fees, the bond fees, the transfer duties, and any other costs, maybe renovating, getting furniture up in place, anything that you might need to be able to acquire or to do as a cost. So when you buy at least 10% below market value, then you know the price or the value of the property is inclusive of everything you spent. Of course, the lower the better. And then after you've been patient, you've negotiated, you've done everything you could do, then close the deal fast. Close fast. Close fast, because most people who are those people that are buying are looking for those deals as it stands now. They are looking for the best deal. So you're not the only one looking for it. So the moment you see, you agree, you understand, you've been patient, now it's time to make a decision. You've negotiated and you've decided, then move fast. Move fast at that rate. Because like I said, the seller can change their mind because of different reasons. But if you've taken long to get to close, and then fix your rate. That's the next step. Fix your rate. Like I said, we've already dealt with that one, when and how you can fix your rate. Now, how then can YDT help us in this whole process? Because most people we have come to understand that they do not know how YDT Group can be able to assist us. I'll just go briefly through our YDT companies so that everybody knows. YDT is a group of companies. It is a group of companies. It is one of those companies, YDT Property Developers, where we are property developers. We have got YDT Real Estate Agents. We are registered agents with the State Agency Affairs Board, and our property developers is registered with NHBRC and relevant bodies. We have YDT Home Loans, which we are operating with an in-house bond originator. We bought bond origination years ago, so we are bond originators in-house. We have YDT Financial Advisors, registered with the Financial Services Conduct Authority, which used to be FSB previously. We have a registered financial services provider, which then we are able to advise people with their finance as well, personally. Within the group, though it is also partly independent, but is a member of the group, is our attorneys, in-house attorneys, and the attorneys. They are the conveyancers who also help you to do everything in the process. So you deal with only one company, with one person, through the whole process of the whole of your property transaction. So how can we help you? We can help you to pre-qualify you, for you to check before you purchase, or when you do not know. Most of the clients that come to us, which is our ideal clients, they come to us and they say, I just want to buy a property. I don't know if I can even buy. I don't know where to start. I know nothing. Those are the people we can assist as well. You just say, I just want to do this, but I don't know what to do and how and where. We pre-qualify you in-house. We advise you in-house. When then your credit record comes back not good, we rehabilitate you in-house through our YDT financial advisors so that your credit record can pick up to where it is. If it is good and ready, we help you find your day one asset in-house through our YDT real estate agents. We then, after that, help you apply for a home loan. All this time, you're dealing with only one person who's communicating with you, where you can ask questions. You're not dealing with many people because we understood that's why YDT Group was formed, for your convenience and for your understanding, because you understand this process can be very tedious. So we help you apply for a home loan in-house, negotiate your rate in-house. We help you get the insurance. After you get approved, the bank wants two sets of insurances. One, to make sure that if you die, insurance people would know this time and they would laugh. Should you die, then their money can be paid back. They need you to have a life cover. Then we give you that in-house. We work it out with your schedule, with your way we're doing. Also with estate planning, if we have to plan your estate as well. Then they want an insurance to insure the property itself, that should the property burn down, the acts of God happen, anything happen to it, we help you in-house, we do it for you. Like I said, our transferring attorneys are in-house. We help you with renovations in-house if you need to renovate, extend to a property developers company. We help you manage the property in-house. We help you with general consultations and general coaching. Those are separate, those are done, those are paid for. If you don't want us to help you with the transactions, we just want us to give you information, we sit down with you, we create a coaching session, we create a package for you, and we assist you and work you through the process. And then lastly, when it's time for you to sell, we help you sell your property. We are already representing some sellers in this market because we know how to manage and balance everything. We are able to balance also to protect our sellers in the same market. To say, all right, this is how best then we can do it. Some of the sellers have bought through us previously in this past many years. And therefore, we are able then to advise them to say, remember, we had planned for this from the beginning. Therefore, let's do it like this so that we can ease up some of your cash flow so that you can do things better later on in a later stage. And this is the way we can assist you at YDT Group. I am now open for the next and the last round of questions. Over to you, Tiamo.
Awesome, sure. These webinars have been going on for the past 6 weeks, and I must say that I've learned so much myself as well. So I just want to thank you, Mr. Yabela, for these kind of seminars. They've been very informative, and one would think that they know some things about property, but through these webinars, I've come to realize that I don't know much. So you're welcome, everyone. Those who have joined us as we go, you are more than welcome. At this stage, this is where you raise your hand or you unmute your mic or you go to the comment section and leave your comment there and I'll read it out for you. Right now, I'm gonna allow Monjane Mukhwale, I hope I'm saying your name right. You're allowed to unmute your mic and ask your question because your hand has been up now for some time. Thank you. Over to you, Mukhwale.
All right. Good day, everyone. My name is Monjane Mukhwale. Well, I was known as Clive. Now I'm Monjane.
Hello, Monjane. Sorry to disturb. Can you please raise your voice or your volume because we're struggling to hear you.
Can you hear me now?
Yes, it's much better. Thank you.
I wanted to ask, with the current volatile and ever decreasing interest rate or repo rate, what is the relationship between that and the market value of properties at this stage? And my second question is, where or what is the best place right now in terms of buying properties? Should we start developing or should we buy properties that are already developed? Yeah, I think those are the two questions that I just wanted to ask. Thanks.
All right. I think we can continue, Tiamo, we'll take one question and answer it so that if there are follow-ups, we can already address them as well. Thank you for the great question, Mr. Monjane. Look, the economy, mostly with property, that's why I was saying the best thing to invest in now is property. It does not affect the property value, the actual real value a lot. The property value is affected by many other things, but the market not a lot. However, the market activity can seem like the value has dropped and been affected. For example, most people right now are selling below value because it's either the person is motivated to sell or there are not many buyers. Again, in the previous webinars, you will learn and see and watch that I had said from the research, it clearly shows that one purchaser has got 8 properties to choose from as it stands now in the South African market, the same as in Bloemfontein. Now, that then means the purchaser can negotiate the price to be less, but that does not mean the value has dropped. It means that the person bought less. Now, that is where the danger of automated valuations come in, which is what people who are literate and think they are experts in a field that they are not. They say, look for an automated value to know the value of the property. That is absolutely incorrect. It will be inaccurate. It will give you an idea of the current sales of the properties in the area, but not the value. So there is no strong direct value between the interest rates dropping and the property values dropping. But in terms of the prices, yes, people then tend to sell less. In terms of your second question, to say which one is the best place to buy, that is a very open, broad question, because it is not, the place is informed, or the location is informed by the objective of the buyer. So we cannot say the best place is the south of the city, the north of the city, or wherever you are, or this place. That would be a very reckless and irresponsible advice, because the location, like I said, is informed by your objective. If your objective is to put in student accommodation, and I say the best place to buy is Bloemfontein North, I'll be totally misleading you, because there are extremely few students that are able to stay and live in Bloemfontein North. Do you understand what I'm saying? So as a result, based on that, we cannot be able to say which one's the best place. However, when then we sit down with you to help you buy, we will be able to tell you which place is the best place for you specifically to buy based on your objective. And we can do that privately. I hope that answers your question, sir.
Okay, Monjane, I hope that answers your question. Otherwise, you're more than welcome to unmute and let us know what you think, or if you have a follow-up question. All right, there isn't any other question. I'm just going to give everyone a platform to anyone who unmute at this stage and just ask a question, perhaps a couple more seconds.
All right. When people don't ask, I normally want to think that they understood.
I believe so too.
Okay.
All right. Oh, okay. Mr. Teminkosi, Senator Teminkosi, you are welcome to unmute your mic, sir.
Good afternoon, Bloemfontein.
Good afternoon, sir.
I hope you are feeling much colder, but it seems like I'm the one feeling colder this side. Very interesting presentation. Thanks for the invite. Now, if you look at high level, when I say high level property, for instance, I'm referring to your property owners that are dealing with offices, that are dealing with malls, and so forth and so forth. And if you look at that rate or at that level, you will actually notice that a lot of them have been hit hard in terms of the share price. Is there any opportunity for new entrances to look at the commercial property investment, that is number one. Number two, even at your middle ground property, which is not really a high-level commercial property. In other words, you've got a property that you are renting maybe somewhere in Durban, but now you've got a tenant that is not been able to pay, either because he has lost his job or for whatever reason. So how do you then promote and say, look, property is the way to go? How do you advise somebody who is having reservations like those?
All right, sir. Are you finished, sir?
I'm done.
All right, 100%. These are valid questions. These are actually great questions. I'll start with the first one, sir. I'll start with the first one, or rather, let me start at the back, because this is we're mostly focusing on residential property, but I'll touch on commercial because we're investing in that as well. For a person that has lost their job, or a person who's concerned that people are losing jobs, so why do I invest in property? Here is a reality, say, that does not change. Everyone needs a roof over their head. It is part of the needs of the, what do they call that, hierarchy? Is it something hierarchy of needs? Everybody will need a roof over their head.
Maslow's hierarchy of needs.
Thank you, sir. Maslow's hierarchy of needs, thank you. Everybody needs a roof over their head. Now, what happens is, just like money, people move from owning to renting if they end up losing their house because they don't have a job, because they need a roof over their head. A person was renting a place because they had an income and they had a family. They lose their job. They just scale down to another place that they can afford, or that they can get assistance to rent from somebody else. Now, what then happens is, for a person who's concerned about those things, we advise on ways of managing the risk, which is one of our things that we do for our purchasers. We help manage the risk. And one of the general ways of managing the risk, which is, I'm loosely putting it out there, is to spreading the risk, putting more tenants in the same property instead of one. So that then if one cannot be able to, then you've got others that will still be able to. You understand what I'm saying? So, but there are many other ways of managing the risk in your property, given that, to address those concerns that one might have. But like I said, bottom line is everyone will always need a place to do. So there will be many things then in managing that risk. One of those things would also be to look at the area to buy, because then there are certain behaviors, human behaviors that come into play, even in property. That when people tend to lose their jobs and are looking for a certain cheaper place to rent, they then tend to gravitate in each city to a particular area or a particular place. So then we help you manage it in that way. Maybe looking at that place to can be able to manage the risk for you as well. And then coming to the one that I love the most, which is commercial property. All right, in your question. Commercial property, sir, right now you are correct. The commercial property space is the one that is hit the most. Now, coming back to Munchane's question, with commercial property, it is different in terms of value, because commercial property has got a base value, what we call a base value, and then when we are doing valuation, it's got many levels when you're doing a valuation for a commercial property, and then we get to another level which influences the value a lot, and that is the income of the property. Now, the commercial property space value has been affected as well, because it goes in parallel with the income that comes into the property. Now, if then there being a market, yes, there is definitely, that is one of the biggest markets that are open right now to buy. But there we have to be more peculiar, diligent with our checks and our studies. Because the same reason people don't live in a commercial property. Some people who had offices are closing them down because the business now shuts down. There are more office spaces that are open now. So one then has to be very careful in buying which area to buy, when to buy, how to buy, at what price to buy. Because if then you are buying the very same complex that people have left their offices, of course, the value is going to be way less. You're going to buy it for much cheaper, which is a good investment opportunity. Now, the next stage then we'll have to then check, how then am I going to be able to monetize from this property? Am I going to convert it? Am I going to do something different that will get more people to come? If it was big suites, let's say it's an office complex, if it was many offices, big suites, am I going now to break it down to small offices? There are so many other things that we need to look at. But in terms of answering your question broadly, yes, there is an opportunity. It is the best opportune time. And for investors, the commercial property is the first one that they let go of quicker when they need to sell. It's the one that they don't pay, because even though the laws are much not protecting the commercial guys. Look, with residential, there's eviction laws. There's many things. With commercial, it's totally different. Now, though there are those things, what then happens is when the owner abandons the building, stops paying the bank and whatnot, there is a different process to take to repossess and to sell it on auction. And because it's a business, it's a commercial property, the banks tend to take longer to do it. So it is they are the easier one to quickly buy and accumulate at this point in time as well, to answer the questions. I hope that answers you, sir. Does it answer? Thank you very much.
Okay, Senator Temingos is satisfied. Thank you so much for that question. I see Munjani just wrote out the question that he had asked for us earlier, where he asked, is there any relationship link between the declining interest rate or repo rate and the growth in the market value of properties? I believe that question has already been answered.
Yes, the question was answered. My apologies. I think
yes.
The message just came in late. I had sent
okay.
it. Yeah. Sorry
okay, sir. Thank you, no problem. The time is now 28 minutes past 1 o'clock, and we advertise that this webinar is from 12:30 until 1:30. So with these few minutes, actually seconds that are left, because I still need to give over to Mr. Abela Tlali to wrap up. If there's anyone who would like to ask a question quickly, you're more than welcome to unmute your mic right now. Otherwise, I can give over to Mr. Abela to wrap up the session. We just want to thank you once again, everyone, for joining us. Please don't leave yet. If you do not mind, we're gonna ask at the end of the session if you can all show your videos so that we can just take a picture together. If you don't mind, please.
I think we can just one question, if there's any question, just one person.
Yeah.
No, I guess not. All right.
Yes,
Thank you. The question is solved. All right. I want to thank everyone once again for joining us. I hope and believe that this will help to achieve its objective. The objective for us to do this goes in line with our mission statement, which is just to create wealth and build legacies for families through property ownership. And which is why we are doing this for free, which is why we are doing this every week, which to educate people, most importantly, the previous disadvantaged people, which is a Black child. We are here to help you own property. We are here to assist you build your property portfolio in the best way possible with our experience of years and years and years and years that is coming to you for free. We are now saying, come speak to us. Let us help you to do it even better than you know to do it, including protecting that wealth, including building it properly, buying it with the right entities, the right time, right place, right way, best price in place. In the coming weeks, we're going to be loading also testimonials with people's faces telling their stories. You might know them, of how we've assisted them previously and still currently even now. So one last time, thank you for joining us. And please do get in touch with us. Over back to you, Tiamo, for the picture and so that we can release people.
Awesome. Thank you so much, everyone. Please, Mr. Abela, remove your slide so that everyone can show properly. Thank you. That's more like it. All right, please show yourselves so that we
Our
can.
faces are not camera ready.
I knew that was coming, but it's
But I
fine.
will show myself. Oh Lord.
Please.
Is this going to be going online?
Yes, it is.
Yeah.
It's okay. If you're not comfortable with your face right now, you can just show your name. It's really okay. Because you need to be aware that this will go on Facebook, this will go on our social media.
Yes.
Okay.
I'm not comfortable with showing my face. I was not prepared, so
Okay.
sorry. I'm not
That is
being
fine.
nice.
That is fine. Please don't leave. Your name is fine then.
Okay.
Yes, thank you so much. Guys, I hope we heard the disclaimer, don't sue me tomorrow. This is going to our social media.
All right.
Do I look good?
Yes, great, Asanda. I don't know what you were worried about. Great. Thank you so much, everyone. I'm glad we kept to time today. You are welcome to leave. I hope everyone got the necessary on the comment section. And thank you so much. See you next week. Please invite your friends if you enjoyed the session. Don't keep knowledge to yourself. Thank you so much. Bye.
Thanks, bye.